Welcome to the Hamsi Analytics Daily Market Commentary. I'm Pablo Navarro. Today is Thursday, June 21st, 2012. For the market internals, the New York Stock Exchange advanced decline differential closed at negative 1877. The Nasdaq advanced decline differential closed at negative 1438. There were 14 new 52-week highs for the S&P 500 and 8 new 52-week lows for the S&P 500. You could mention here the breadth of the market both for the NYSE and the Nasdaq were pretty bearish, finishing at the lows of the day, which was not good. You could see a fall minute by minute, making new lows throughout the day, pretty much in line with the market. So that was not good at all for the internals of the market. On the volatility, there were 400,000 contracts traded on the VIX with 80 million in total premiums paid. For the dollar-weighted put-call ratio in July, we saw a 0.31 reading with 57% of the total premiums paid, which is bearish. On August, we saw a 0.36 reading with 34% of the total premiums paid, again bearish. Those were the 2 months that had the big premiums paid on it, so both of them bearish. Okay, here we have the daily chart for SPX. You can see here a big down bar today. We were down over 2%. We're stopping at the 0.6 line, but because we were out of time, we need to see if tomorrow we're gonna hold that 0.6 line to the downside or if we're gonna continue to go lower. Pretty nasty action today in the market. You can see here the 60-minute chart on SPX, all of them lower, bar after bar after bar, finishing at the lows of the day, which was not positive for the market overall. So to look at some targets, we're gonna look at the SPY. Here we have the daily chart for the SPY. So if we do break the 0.6 line to the bottom, we're looking at the 130.29, 128.30, and then 126.26. Those would be the new low for the year. One thing I want to mention, around 129.60 is the 200-day moving average, so that's going to be a key level to break. So around here we're going to have a big resistance of the 200-day moving average. You can see the formation basically like this, the 200-day moving average. So pretty much if we break the 0.6 line, next target would be the 200-day moving average. Another important thing here on the weekly chart, just got pretty bearish. Yesterday we had a hammer to the last week we had a hammer here. You can see on the weekly chart we were going up, everything was going good, and we test 0.6 line to the upside, failing. Now we're on the downs of lows of the week. We're gonna have to see if it's gonna be an outside week. It's pretty far away, but still big reversal on the weekly, failing at the 0.6 line. Not positive, so again looking at the 129 level here on the weekly chart, the negative 2 sigma. So we're gonna see what happens here tomorrow on Monday. Now we have GLD. Bad day for GLD, also down 2.5%. We talked about the breaking of the short-term trend to the upside here 2 days ago. We broke that. We were cautiously bearish, and then we broke the 0.6 line today to the downside, finishing almost at the lows of the day, as you can see here, pretty bearish. So from here we're looking for this triple bottom target 148. If it does hold, it's gonna be a good support there from so far, but it has had a couple of opportunities to bounce from here. You can see here it tried to bounce, nothing, tried to bounce, nothing, tried to bounce, nothing, failed to do a new high, and then looks like we're gonna come and test this level. Breaking that level would be extremely bearish right now for gold. But let's stay on the short term, 147.85 on the downside, and then on the weekly we're looking at 144.26. So we'll see what happens if we are able to break that level to the downside. Last chart we're gonna look at VIX. Huge action on the VIX today. Was up 16%. Outside bar reversal to the upside. Yesterday we had an outside bar reversal to the downside. Pretty much what you can get from here. The market does not know if it want to go higher, want to go lower. One day reverses to the upside, the other day to the downside, the other way around. So that's what it's doing. We're gonna look what happens if we're gonna be able to break this 22 level, make me go and do a new high. Certainly looks like the VIX wanna go higher, uncertainty back in the market, 16.5% up today. CI now pointing higher. So difficult to be bullish after this huge bars to the upside on volatility and to the downside on the market, taking pretty much a lot of what we have worked on the upside for the market. So let's look at some internal for the market. Here we have McClellan oscillator. It's taking a breather. We talked about we were short-term overbought pretty heavily. 2 days down here now. Right now we're still positive. It's not good territory. But right now, okay, it's easing back, which is good. So that's pretty good for the market overall. For the advanced decline differential, let's look. Okay, here you can see the advanced decline differential for the New York Stock Exchange. Here's the breadth of the market. Pretty soon after we opened, we started tanking here, and it just went lower and lower and lower. We finished at negative 1877. You could see here the direction of the market. If you were following this, you could see pretty much what was happening. Some short-term bounce here, but pretty much the overall trend was bearish, as you can see, always heading lower and lower and lower. So pretty bearish on the market here right now. That's what we have for charts, and now that's it for the talk to you tomorrow on more charts. We have a special offer by TradeStation. Get your Hamsi Analytics proprietary indicators paid by TradeStation. Contact Active Traders office in Chicago, Peter Albino, at the number listed below. Have a good day. I'll speak to you tomorrow.